talk about the bear case in the industry and how we have worked on it, because I think it matters, because halving is right around the corner. And I was just at a conference in New York and all the other miners were there. And I was blown away by how people aren't prepared for this.
All right. So, Zach, appreciate you coming on. I know that this is you've been doing a bit of a not a tour, but I've noticed that a lot of people from a lot of companies recently have been reaching out to retail traders. And I think that because obviously they realize that that's the next level of investors. The old guys are dying off. You got to have somebody to replace them and replenish. And the best way is to go to where they're at, which is in this space. So I know you guys had reached out to me. I appreciate you coming on to answer some questions. We have a lot of people in our community who are that do invest in crypto mining, blockchain technology, and we've got some people that are very passionate. I do not envy you dealing with the crypto bros on a daily basis. That has to be absolutely insane. So real quick, if you wouldn't mind, I know you do this every time you go on, but if you would just, humor me, would you mind giving like a quick introduction of who you are, what CleanSpark is, how you guys got started, and what you guys do?
Absolutely. So I'm Zach Bradford, CEO of CleanSpark. CleanSpark, we are a Bitcoin miner. We operate mostly in Georgia. We have 5 facilities. We're right around the 3rd largest by production in the country as far as publicly traded miners go. We have spent the bear market building, definitely haven't put it to waste. So as of the last several months, really over the last year, we've been the fastest growing. And our focus has been on managing energy efficiently. That's actually my background. The company, we actually pivoted a few years ago into Bitcoin mining from energy. Because we were actually frustrated with, renewables not really paying off. We were a renewable energy company. So when we moved into this space, we were focusing on responsibly mining Bitcoin. We really love Georgia because it's backed and supported by nuclear power. I'm a huge believer in the carbon-free aspect of nuclear power. And so we picked it as a home and have continued to build there. So really excited to get into any of the questions that anybody has, but I guess a few other things. If anybody wants to look into it while we're talking, we're listed on NASDAQ, and you can find us at cleanspark.com, and also you can see me on Twitter.
All right. Full disclosure, I don't own any CleanSpark. I never like to have that conflict of interest. 2 quick things to get going. Number one, you're the second, executive from a Bitcoin mining company that we've had on here. I'm sure you guys have seen the interviews we've done with the other one. So, we're not trying to start any brawls out there between the Bitcoin mining companies. And the second one is I saw that you are an accountant.
I do. I was CPA by education.
Yeah. So that's what I meant by you went to Southern Utah.
That's correct.
Southern Utah, and you got your accounting degree. I need some tax help. Okay,
well, you're not gonna find it from me.
Okay,
so
but I'm just saying, like, I might need some tips because my shell companies haven't been performing, and I'm having some issues with customs. I thought maybe you could help after stream, so I appreciate that. All right, so. I saw you guys are also located in Las Vegas or outside of Las Vegas. I'm going to be there twice this year. Are you guys looking to sponsor a fight by any chance?
Oh man, I would love to.
Okay, good, because I'm boxing on December 2nd. I need a.
But come hang out for sure.
Okay. All right. So you said you guys are doing Bitcoin mining in Georgia. I've been recently investing in nuclear energy after the Georgia plant went on board online, and we had the. Diablo Canyon out in California just got approved to stay open. A lot of people are fearing nuclear energy because of obviously, once every generation there's a meltdown. And I'd like to get your thoughts on this since we're going to move into how you guys power it. But what are your thoughts on this move right now between a generation trying to get off of dirty energy, move to green energy, but we're obviously a long way away from that being sustainable at the large scale. And in my opinion, I think nuclear is kind of like primed for a comeback, barring another meltdown. But you said your company was in renewable energy, so you're familiar with that market. What are your thoughts on that? Where do you see the energy sector, even with oil going up right now, energy sector over the next 5 to 10 years? What do you think is something to keep an eye on?
I think that the fact that it's going to take longer than 5 years, and that's what I really believe that's where most people, regulators, so forth, they're missing the boat. We're built on a society that's using more power, not less power, on an annual basis. But we're all used to walking over and flipping a switch and having the power there. And when you break down how energy really works, it has to be generated, it has to be available. And renewables aren't going to always be there. The sun has to be shining, the wind has to be blowing. There's the intermittency, and then there's the effect that intermittency has. So there needs to be an energy transition. That means you don't turn off the natural gas plant tomorrow and expect the solar panels to take care of it. Instead, there needs to be a transition from fossil fuels all the way over. And a key thing with this, though, there will always need to be base load power generation, something that just sits there and it's always on. And nuclear power is the perfect thing for that. Nuclear power doesn't ramp up quickly and it doesn't ramp down quickly. It just is there. So it's the best thing, in my opinion, to create the foundation. Well, there's all these other aspects of the power grid on a generation side that can come in, intermittent renewables. You can have your natural gas peaker plants or base load plants, but they put off carbon. So the way to reduce that is to have a bigger base that's always there. We always need the ability to flip the lights on. And so I think the concept of abundance is something that we need to really be focusing on in the energy space. Instead, the narrative over the last 30 years has been, conservation of energy, keep your lights off, things like that. It's all good because
Unless you live in Texas, but yeah.
Yeah. From an expenses point of view, that makes sense. But again, when you really break it down to how the grid works, you need the generation there, you need a base load there. And we're actually, there's places in this country in the Northeast where they're turning off power plants quicker than they're building anything. And so, you look up in the Northeast in particular, in the PJM territory, which is a conglomerate of utilities, they're actually showing a shortage of generation inside the next 7 years. And there's really no answer to it. One problem we have is nuclear power plants also take much longer to build than that. So, there's some interesting problems that need to be solved. I do think that there's an opportunity for Bitcoin mining to help solve some of these problems. Because when you go to build anything, and was our background, you need to build it. That means you need somebody to buy the power, pay power bills, and get an ROI on your investment. That's what makes the world go round. And if you're building for a gap in generation in 6 years, well, you don't want to necessarily build the plant today, because otherwise you're not going to get paid very much money in the meantime. And so Bitcoin miners can partner in areas with the utility, with communities, whatever it may be. We'll consume all the power, but then we'll give the power back when they need it, because you always want to have more generation than the grid actually needs at any given time. Otherwise, you have a meltdown like what happened in Texas a couple of years, where really the grid instability was causing massive failures and they had no option but to just shut it all down to avoid mass calamity and damage. So Bitcoin miners can be the key piece of that puzzle.
We actually saw something similar with, I don't know if they're a competitor or not, but Riot. They actually went offline for a while, and they got a huge credit from the Texas government for kind of like saying, hey, listen, we'll back off, let the grid, be healthy. And then when it comes back, strong, we'll get that credit. So I saw that. How do you guys generally get your power? You guys are do you guys use hydro because of Lake Mead, or how do you guys generally get your power?
Well, because we do all mine in Georgia. We're basically the Georgia mix. So it's actually mostly the nuclear power. We actually don't have any mines here in Nevada.
Oh, you don't have just the headquarters?
Yeah.
Okay.
Just headquarters. We actually operated heavily in California before, and we of course exited out of Dodge because of how good California is in business. So, but we really like Georgia, and so we're on grid power. We partner with communities. We have 5 sites across 3 utilities. But the majority of our sites, so 3 out of the 5, are connected with what's called the Municipal Energy Authority of Georgia. So take the Wayback Machine. 50 years ago, Georgia Power goes bankrupt. Well, 49 cities got together and formed a co-op and they bought components of the power grid. They then used their city budgets to fund bonds and things like that to own generation facilities, including part of the Vogtle plants. And so these cities actually put up the money to build Vogtle, 30 years ago, and they're finally getting some of the benefits. So we're sitting there, like usually in these cities, it's 70% plus is actually based on that nuclear power that they have. So that we're really heavily focused on using that nuclear.
So you guys
power.
are basically roundabout way using nuclear power to power your mining.
Yeah, that's what it is.
Oh, okay.
But we're grid connected.
Grid
So it's
connected,
not like
but
we're
yeah,
sitting
but
behind
it's that
nuclear
it's
power.
I get what you're saying, which is actually
Yeah.
interesting. I didn't know that before I asked the nuclear question. I know you'd said that you had worked in renewables. All right, so Georgia, which obviously one of those lower tax states, obviously good for business as well.
Yep.
And you're close to the Bahamas in case you need to get out of Dodge. So I get it. It's cool. And so now we've got there's a lot of outrage out there about the consumption of power, right? Like how much power crypto mining uses. Now, full disclosure, I'm not a big crypto guy. I do invest in Ethereum actually, but a little bit more for the blockchain technology. But I'm more of an investor I like the idea of investing in the work behind crypto, right? Like, we don't know which coins are going to be the leaders in 20 years. We hope, think it's Bitcoin, but there could be a change in coins. There could be a change in regulations, but the technology is kind of what I look at. But there's always this fight out there of consumption, right? Like, is it worth what we're getting from it? This decentralized currency, if you want to call it a currency, the decentralized, technology, versus what is at what cost? And, you got the halving coming up pretty soon. You've got a lot going on in the crypto space. What would you say? Let's say I was somebody who was very, very, concerned, not just outraged, because that could be anything, but I was concerned. And I came to you with real concern and I said, hey, I think that the effect of this on the environment, on the energy and everything is not worth what the concept is and what we think of the future is. How would you rebut that? Or not rebut, or just how would you ease my worries?
The energy use is a feature and not a flaw. And I'm a huge believer in that. And you have to go multiple levels on this. But first, let's talk about its effect on Bitcoin and why I believe Bitcoin will be the winning coin, token, currency, however you want to look at it for the sphere that one of your viewers may be in. But I believe it's a winner because it's the only coin that doesn't have a CEO. It doesn't have a group behind it that they can say, hey, I want to change the rules. We saw Ethereum do this, maybe for the good, maybe for the bad. I do want to point out, because I think that's the easiest comparable. Ethereum, in my mind, is a platform. It's a platform that enables building. And if you think of the ecosystem, it's important to have differentiators, actually. So you have Ethereum, the platform, you have Bitcoin, what I believe will be the long-term strongest value payment system. So gold, right? So you basically have the gold standard, the Bitcoin standard, and then you have these platforms and other things that are built on it. They have utility in different ways. And that's all good things. They're just different. So let's talk about the energy use.
Real quick, I can tell you've been dealing with crypto bros because of how you just narrated that right there. Like, you negotiated that. Like, you're like, I'm not going to say one's better than the other. They're different. And I could see that this isn't your first rodeo. It's nice. You didn't have to worry about it, but I appreciated that. But go ahead.
No, that's good. So I know you have a lot of listeners, and everybody's sitting on different sides of this. And the good thing is we're all sitting on the same side, in the sense that we're moving into really the future, right? And I really think that digital assets have a massive place in the future. But so let's go back. Feature, not a flaw, because that's actually what creates the security. So, and not in the form that you think of traditionally, but if you think of a 51% attack, right? That's really how you could change the direction and structure of Bitcoin. But it would cost so much capital to not only build the facilities, buy the machines, spend the years it takes to get all that in place, and then all the power you would need to consume to actually do a 51% attack. If you didn't have to have something that like power to buy and pay for, it would be much easier to have the security behind it. But that's also what creates the consensus mechanism. What we do as miners is we're chipping away, where we're chipping away to prove out a block every 10 minutes. And there's, trillions and quintillions of guesses going on in this process. And yes, it all consumes power, but that's what allows us to be a peer-to-peer system with no, person behind the curtains, no government that's going to, print more of it and, shoot up inflation, which we're all dealing with right now. It's the one thing that you can look at and say, hey, in 100 years, the algorithm is generally going to be the same thing. Now, there's going to be small tweaks and small changes, but I really believe that, incentives are aligned so that there will never be more than 21 million Bitcoin. And that deflationary effect over time and that lack of certainty about the end outcome, I think is incredibly important. Now we can talk about all the consensus
let me ask you a
happen
question real quick.
and things like that with Ethereum, but all of that goes on the back of power and infrastructure at the end of the day. And without it, it just doesn't work.
Okay. Theoretically speaking, what would a Bitcoin mining company do if there were no more Bitcoin to mine?
We would run off of the transaction fees.
Okay.
So the last Bitcoin to be mined will be in 2140. So this is a problem. It's a problem that's a long ways out, but transaction fees will be the mechanism. Right now, transaction fees are very low. And I think that they can still stay low as a percentage of, I'll call it the fiat value of what happens. But you look at some of the biggest businesses in the world, that's MasterCard and Amex and things like that, they can function incredibly well off of a fraction of a percent of transactions.
Now, forgive me because I'm not as immersed in crypto, but
yeah,
wouldn't that almost defeat the purpose, one of the purposes of crypto now? Like we have this idea that crypto is without a middleman, right? Is without someone taking a piece of it or someone, keeping this money and it goes between them as a middleman. But like if we're now collecting money on transaction fees, isn't that kind of like almost moving towards that same steps towards where we're at, or is that we just kind of separate that?
Yeah, it's very separate because there's no one that's stopping that transaction. There's no one that's saying you can or can't do this. It's, Ethereum users are very familiar with gas fees, right? There's a similar mechanism in the meme pool for Bitcoin where, you actually don't have to pay a fee. You could basically insert your transaction with, a tenth of a penny worth of fees, but you are going to get prioritized by fees. That transaction, could stay unverified for a long period of time. And there's actually a lot of debate going on amongst, in your words, the crypto bros, whether it's a good thing or a bad thing and, what that means and, hey, let's change this or change that. But that again points to another feature that it's not easily changed when the wind blows a different way.
Yeah, I think it's more that slippery slope concept. Like, oh, if it's not completely hands off and people are making money, people are greedy, somebody will find a way to exploit this, and then we move closer to that. Oh, well, now you've got to do this, but it's not. And then I think there's a concern because one of my things about crypto is that I've always believed the best thing about crypto is the worst thing, and that it's unregulated. That's the best thing about it, right? Like it's not regulated, no one's dirty hands in there. If I want to send, a value of something cross country, let's say I want to, send my stepsister 1 Bitcoin, right? Like I get the money sent out there, she gets it, and it's a seamless transaction. However, the worst part of it is that it's unregulated, meaning that by the time she gets it and wants to use it, she can't spend it. She has to then turn it into fiat currency, and it could be 10, 20% difference by the time she does. So it's like the best part about it is the worst part about it. What do you think would be the steps or the next step for crypto as it is to being adopted as a form of currency that merchants would actually accept because there's some stability there?
Yeah. I think that it really comes down to the layer 2 technologies. That is going to be an important piece of this. So Lightning Network is, obviously, I think a lot of people are familiar with it, that allows Bitcoin transactions to happen quicker, but they're meant to be more small scale, more retail based. It's not perfect. There's still steps that need to happen. And I think that what we are seeing, what we do know is adoption is increasing. The numbers are there. today versus 6 months ago, it's more likely you're going to be able to walk into a retail store and pay with Strike and pay with Bitcoin. Although the numbers are higher, that still may only be 1 out of every 100 stores that you walk into, right? But what needs to happen is it needs to be 1 out of every 50, 1 out of every 25, until it becomes a much more normal thing. I think that that's going to take time, but I do think that on ramps and off ramps are going to be a key point of that. And I do believe that those should be built on layer 2 technologies, easier ins, easier outs. That way in the layer 1, you can still hold your Bitcoin, you can put it in cold storage, you can do all of those things, but you can also keep a little bit in your Strike account or, any other wallet that you want to use that allows rapid transactions. Walk into a store, tap to pay, move on, just like you did with everything else. I myself always keep a little bit on me, a very small amount, but hoping, hey, the next store I go into, I can actually transact with Bitcoin. And it's far and few between, but, being able to buy a book with Bitcoin is happening. And it is something that I think will become more common.
And I don't want you to feel like I have you here to defend crypto in any way. Like, I'm not,
No.
I don't want you to feel like,
I think it's good because we need to address real challenges, because adoption is the measurement of real value. It's not the price today. It's not the price tomorrow, because we know volatility is going to be there all the time because there's macroeconomic effects, the way the wind blows, right? But adoption is the true measurement of value, in my opinion.
well, and that would obviously be the case with, any type of currency as it goes forward. Like right now with BRICS and the petrodollar, like obviously there's talking about adoption, right? Like, will people, the value of money is what people are willing to believe it's worth. There's like no other value from it. My only question is that, and this is something that you probably have to deal with in the industry, is that it must be frustrating that all crypto moves the same right now, right? Like there's no, when Bitcoin goes up, all the other cryptos go down. When Bitcoin goes down, or the vice versa, right? When Ethereum goes up, it brings the rest. So it's trading like a commodity and not like a currency, right? Like you would, like if the US dollar goes up, the euro might slide and the yen might go sideways. But with crypto, it's like they're all moving as commodities. Is that just because we're still in that adoption phase and people don't understand it? Or is that something you think is going to break down the line? Or is that just part of the natural progression of this?
Yeah, I think that they should trade like commodities. I think Bitcoin ultimately, functions as a commodity. Um, you know, what I think is interesting though is I think it actually makes sense. It's there's an ecosystem, so when they do kind of trade in tandem, but there are going to be points in time where you're going to have things that cause shifts to happen, and it's going to be an external input or output, right? And I think that, for example, the ETFs, the Bitcoin ETFs, the spot ETFs, and
Grayscale, for those who don't know, he's talking about the one that just happened.
Yes. So you have, Grayscale's been doing stuff, and BlackRock, and you have all these things that have filed, right? You have ARK and everybody else. There's a whole line of like 12 institutions now. And what they want to do is they want to be able to get institutional money and put a percentage of their capital they manage into Bitcoin directly. And so right now, the SEC has approved Bitcoin futures, basically trade the options trade on Bitcoin, right? But to actually buy, own, and hold Bitcoin at spot price.
Mm-hmm.
Now, I believe that's going to be an event that moves the Bitcoin market. How much, how little, for how long is, up to massive debate. But what this is that's new money that couldn't touch Bitcoin before. And, the same thing will happen. There's going to be maybe an Ethereum ETF at some point, right? Spot ETF. All of these things are going to happen. And when those happen to these different pieces, it's not just that there's new capital coming in, but it means that is a new market that has given it a stamp of approval. Not that we needed their stamp of approval, but what it does is it does allow people that wouldn't otherwise touch the asset to start to be interested and move into it. And I think that's when adoption curves start to shift and change.
Mm-hmm.
It also changes the supply and demand dynamics of Bitcoin, which is just as important as anything else when it comes to volatility and value.
Okay.
So, I think we're going to see things, especially Ethereum and Bitcoin, trade in tandem on a percentage basis. Obviously, there's the gap between the values. But on a periodic basis, we're going to see inputs that really shift it. I think that Bitcoin has unique systems inside it, not only from an external point of view, but also the internal point of view that will cause those dynamics to change. Halving is another example of that.
Mm-hmm.
Every
Okay.
4 years, the algorithm cuts it in half.
Yeah, and obviously, you know, not that it is a commodity, but it's almost like if a stock were to do a split or a reverse split, you know, it helps out. All right, I want to ask you a question that came to mind just now when I was talking, and I don't mean in any way for this to be like compare yourself to anyone else or gotcha. I'm just really honestly curious.
Yeah.
You talk about the idea of adoption, about holding for the long term and stuff, but I was doing some research with you guys, you know, a night before, and as a company who is mining Bitcoin, if that's the case, why are you guys selling off the Bitcoin you're mining rather than holding all of it like some of your competitors are? Very curious about that.
Yeah. You know, actually, if you look at the most current, we've actually shifted. So I'm a believer in running a company in strategy over ideology, right? Me as an individual, when I get Bitcoin, I hold it. I believe in it, long-term trajectory. But let's now think about stock ownership and value, right? Duty to the shareholders. We actually we made a prediction about 18 months or almost 2 years ago now in November, peak of the market. You know, Bitcoin is in the $60,000 range. We started selling and we were open. We communicated. We said, we're going to sell everything to cover our operating costs. And we're going to turn Bitcoin into assets that are going to get us more Bitcoin. We're going to invest the capital. Our peers at the same time said, we're holding everything. We're never selling. We believe. Well, they had to pay their power bill. They had to pay their employees. Where was that coming from? They were selling stock to cover that, right? And so that was the only place they could get it. Otherwise, they got into debt.
So this was more about keeping the share price higher by utilizing the assets that you had mined yourself to bring up the capital in rather than taking on debt.
Yes, debt or equity raises at the time. You think about it this way, you know, a normal miner, a gold miner, they don't just put the gold in a vault, right? What they do instead is they sell the gold, pay their bills, keep building, expand further, things like that. That's what we did. You go back about 3 months ago at this point, in about June, July, we signaled to our investors, hey, strategy over ideology again. We're going to start to hold more Bitcoin. So because we had now raised the capital we needed, we had funded our growth. We actually have funded our growth all the way through 16 exahash. So we're at 9 for comparison. That's our processing power. All the way to 16 in the first quarter this year is fully funded. Money's in the bank. At that point, we have held the majority of the Bitcoin mined. So we went from less than 500 Bitcoin to, you know, public reported at the end of last month, over 1,600 Bitcoin. We're on a trajectory to keep building that balance. And, you know, from our side, we're doing it because we believe we're about to see those inputs that will cause a rise in Bitcoin's price. So we sold it at the peak, continued to sell it as it went flat. And now as we see that we believe inside the next 6, 12, 18 months, Bitcoin will rise, now's the time to put it on the balance sheet.
So you guys were selling in the 60,000 range?
We did. We sold Bitcoin at 60, 50, 40, 30, all the way down.
My man, creating the bag holders. I love it. I love it. Yeah. I love it. Did anybody call you up and say, hey, you bought? No, I was kidding. But all right, so you sold in the 60s. You sold to the degens. You said, hi, you're the bag holders now. Now they've given up. They're selling it back for a loss. You're buying it back from them. And so, you know, you guys, because that's why I was asking the question. I was very prefacing it that it wasn't a gotcha. I was actually curious because, like I said, in some cases, people do offerings with through equity. Others will just take on private loans and give up, you know, equity, whatever that way. You guys sold it and now you're buying it back. And you said you went from 600 to, I love how you stopped yourself too. You said it's on public record, 1,600. So I know you almost slipped up there. How many are you guys mining right now a month?
We're on pace between 600 and 700 a month right now.
Okay, 600 and 700 a month. And is there, whatever you can disclose, is there plan to continue to hold all of it or part of it, sell it? Like, what do you guys like? How is that? You know, whatever you can say. Like, what is the at least for now the thought process behind what you're doing? Because you said your hash rate's up to what now?
9.3.
9.3. So and you got the energy from the nuclear. There's a new plant coming on Georgia. Hopefully it'll get cheaper, or whatever. So you've got some as an investor, just thinking, I'm not going to invest, but just as an investor, I'd be thinking, okay, cheaper power, more power, higher hash rate, this amount, and you're planning on holding all of it, most of it. Like, what are the thought process here?
Most of it. So we still want to use part of it to pay a certain amount of operating expenses while maximizing what we put on the balance sheet every month. So our intention is we got plenty of cash in the bank, use that before we tap into the Bitcoin. From time to time, though, we may look at an expense and say, hey, that matches better to, sell 40 Bitcoin, which is what we sold last month, pay the expense just because, again, from a strategy over ideology point of view, we are always trying to balance that piece. We actually took, because we really focused on growth through the bear market. And in bear markets, equities are down, things like that. We focused on growing during that period, and we raised a lot of equity capital, and took a little bit of flack for it. But here's the key thing on this: is when Bitcoin is down, so are all the other asset values associated with Bitcoin. All the servers that we purchased, we bought for cheaper. If you measured it on a share for share basis, if I sold shares at the peak of the market to buy a machine versus selling shares when we did to buy the machine, it was less dilutive to our shareholders to grow during a bear market than before. We were buying machines at 1/10 of the value that they were selling at just 6 months before. So in my opinion, we did an incredible job at really always trying to match together what's the best way to get scale. Scale will matter a lot in this business.
Were you able to pick any of those ones from China up?
What was that? Sorry.
When China banned it and they were just offloading and just throwing away all those Bitcoin miners, were you guys able to scoop up some of those?
Absolutely.
Oh, my man. Got a boat.
Yeah.
Got a boat. Just shipped it over there.
Yeah, we have over 90,000 servers now, on our way to 150,000. A key piece with this too is, the publics that other public companies, they had a lot of debt. Private companies had a lot of debt. We actually bought 2 facilities where, the company had decided they were going to invest and they were building too quickly. They had 2 facilities. We bought one, and now it's ours, and we're benefiting from it at the low power prices. So we've done a good job of monetizing at low values when other people over leveraged and had to, basically throw in the towel. So 2 of our 5 facilities were purchased that way.
Crypto is in my opinion, a lot of people are very upset about stable coins and about these kind of coins, but I feel like it's almost a necessary move just to get the mass population to get more acceptance of crypto, even though it could hurt crypto overall because people would less likely to buy an unregulated if they have regulated just because of fear. But at the same time, it feels like it's such a weird balance there of not allowing the government to slowly chip their way into crypto and regulating all of it, but at the same time giving some kind of, I don't know, legitimacy. Maybe if you want to expand on your thoughts.
I think that CBDCs issued by a government could be the worst thing that ever happened.
Uh-huh.
I don't have any feelings about it, right?
Yeah, no. Clearly unbiased.
I think it would be terrible. And here's why I think it would be terrible. It gives the government the ability to choose what you can and can't do. Could you imagine, going into a place and saying, hey, I want to use this government-backed thing that tracks my spending real time. And they decide that you don't get to go into the concert. You don't get to do this. You end up with a social score assigned to you. We are seeing this happen in China with the way that they're doing a stable coin paired with the social scores, right? You complain about the government, suddenly you don't have access to your coins. That's a real thing that could happen. And it's really easy to say, oh, that'll never happen in the US or, in some other democratic country. Well, just wait, how many people have had their bank accounts frozen and, things like that. I can tell you, you can ask almost any crypto company. We all refer to it as choke point 2.0, where, suddenly, your bank calls you up and says, hey, you need to go get a new, you got to go get a bank account with somebody else, right? It's very widely known that happened a lot. And it was because of pressure from the government and from regulators. There's a reason that JP Morgan doesn't have all the Bitcoin miners' bank accounts, right? it's because, they were putting pressure. So all of us have banks and things like that, but it's not with the majors. You can't open an account with a big company because really the government doesn't want to support it. And that's the real reason behind this. So putting the government in the middle of your spending on what you can do on a day-to-day basis is a terrible thing. I get the idea with legitimacy, but if you point to Argentina, which you mentioned might be a bad example, the reality is adoption rates of Bitcoin in Argentina are extremely high.
Oh, well, of course, because of the currency, yeah.
Yeah. So, there a lot of people talk about Bitcoin's value is partially placed in it being, deflationary. And the inflation actually, when it goes up, increases the value. And yes, we have a lot of inflation going on in the US right now, but not compared to a lot of places. So, some people say, oh, it's a failed experiment, didn't work. We have inflation now and Bitcoin didn't, skyrocket.
Mm.
Well, if you measure that in Argentina's currency, it's the opposite effect. And so we've been insulated, but you have to recognize that Bitcoin is a worldwide, access to currency. The value that it's bringing to places that aren't here in the US is really, a way to look in the mirror and see if it's working.
And I agree. There's also the concern that it could be like gold at some point, like a digital gold, right? Where like there was everybody in the world understood that there was a value. There was pretty much an understanding of what that value is. Obviously, there was different implementations in different areas and it could have it. But at some point, it just kind of was like, people were like, well, if I want to purchase something, I have to turn this commodity into fiat in order to purchase because no one was going to carry around gold. In this case, obviously, you have Bitcoin, but with gold's case, the case was, all right, you can't carry around gold, so we're going to give you these notes to say this is how much gold it's worth. But then we found out if we just decoupled that from the currency, we could print as much currency because we don't need a backing. In Bitcoin's case, obviously, the hope is that there's a widespread international adoption, but then now you have to have, at that point, probably 20 billion people to all agree that this is worth something. Otherwise, you're going to see one place may have 20% higher prices than another place just because of a disagreement. Like, how would Bitcoin get to a point where there is a global agreement of a value on it?
Well, there already is. It just depends if you're converting it into US dollars or into,
well, I'm saying if we replace fiat currency with cryptocurrency.
Yeah. Well, that's still the benefit. It still costs. If I have US dollars and I'm in China, it costs the same amount, right? It may cost a different number of, won or yen or something like that. But Bitcoin is still Bitcoin. It does have an agreed upon worldwide value. There's very little arbitrage between locations that can happen right now, except if you buy it in one fiat currency, convert it, and then convert it back over to something else, right? And you kind of do the forex trade. So Bitcoin already has that, but will it buy a little bit more bread here or compared to somewhere else? Maybe that's now you're starting to measure it a little bit different.
Yeah, I think I
think Bitcoin really does have it. And I think that, again, going back, I think that adoption will come where it will be easier to tap and pay with Bitcoin. We're still not there.
Yeah, no, I think I meant more along like the price fluctuation of Bitcoin itself, not so much the conversion rate into currency, but like today it could drop 5% in an hour off of something, like you don't see that with the dollar or with a major currency. So I think that I was talking more about that.